I'm Deborah Borchardt, and this is your midday market update. Well, the markets are in the green territory at the midday mark. However, very light volume, not a lot of trading happening. What we are starting to see is a little bit of a change in gold and treasuries. And joining me now is Mark Newton. He's the chief technician over at Greywolf. So, Mark, we have started to see gold, kind of inching back. What's behind that?
Well, some people attribute that to the Indian wedding season. A lot of times gold historically performs very well between the months of July and October. We did see gold stocks bottom in July and start to rally. And, gold last week on Friday made a short-term continuation breakout. By that I mean, gold's been trending up for the last couple months, but it got above the highs of the last 4 to 5 days and closed there, and so I expect to see some continuation, particularly in this bullish time. So, the target I have is right near 1525, which is the area where gold broke down from early in April, and so that's a decent target. Gold might be a better place to invest than stocks, I think, over the next couple months. The trend in stocks has been shaky, to say the least, over the last, really since the beginning part of August, and we've turned down, and so we've had a little bit of a bounce, but still we're in a seasonally weak time for stocks, and gold is in a bullish type season, so it might look like we can make some further progress there.
We've also seen a change in the yields. We're starting to see a little bit of a back off there. I would think that has to do with the durable goods number that we got out today, and a lot of people starting to think that Fed taper date of 9/18 might not happen.
I think people have been avoiding treasuries and thinking that the taper is definitely going to happen. That's been baked into the market a little bit. And so, when sentiment gets too extreme, which we did see some signs that it has, if you look at the popular sentiment polls, where, treasuries only had a 5% bullish rating by things like the Daily Sentiment Index, DSI, and historically that comes close to times when you see a turn in treasuries. So we got up close to 3%, but we got very overbought with terms of yield. And so we've seen a little bit of back and fill in the last couple of days, but this whole correlation between stocks and treasuries right now remains intact. So right now we're seeing a small bounce in equities, and treasuries are bouncing as well.
All right, but overall it sounds like Mark thinks that stocks are a little bit on shaky ground right now, and that gold might be a better place to go in the short term. That's Mark Newton from Greywolf, and I'm Deborah Borchardt with The Street.